I'm going to record. Okay, and I'm going to let you all introduce yourselves since I don't have any further information about you. And we'll start with Scott.
Well, thank you very much, Catherine. Good evening. Hello, everyone. My name is Scott Coe, and I am here, your facilitator this evening on behalf of the Tax Structure Work Group of Washington. I am joined by an esteemed group of colleagues this evening, and I will introduce them and have them introduce each other. So I will hand it over to my colleague who I work with at Triangle and Associates to help to facilitate these conversations. My colleague, Pauline. Hello, Pauline.
Thanks, Scott. My name's Pauline. I'm here to take notes on all your feedback today. So whatever you say kind of verbally or in the chat, I'll be taking note of and making sure the tax structure work group hears your thoughts.
Thank you.
All right, and our experts among us this evening, who we will direct some questions to, we'll probably pause once or two times during the presentation to have them just give a little additional insight into some of these issues. My very esteemed colleague, Mr. Morgan Shook. Hello, Morgan.
Yeah.
Scott, I love the energy you bring 6:30 on a Thursday.
Yeah, well,
I'm Morgan. I'm with a firm called Echo Northwest, and with Scott's firm Triangle, we have basically been serving as staff to the tax structure work group to help them with some of the technical and communicating aspects of this project. And so we're really excited for the conversation today. I have colleagues at the Department of Revenue, both Valerie and Braden, who actually know a ton about this stuff. But they've forgotten more than any of us here know. And so if there are technical questions that come up about the taxes and some of the legislative pieces, they're here to answer it. So Valerie, Braden, why don't you go ahead and introduce yourselves?
Thanks, Morgan. I'm Valerie Torres. I work at the Washington State Department of Revenue Research and Fiscal Analysis Division, which is a mouthful. I do understand that. We are a bunch of folks who do economic analysis for the legislature. Oftentimes that results in a fiscal note for them during the legislative session. But projects like the tax structure work group is what we get involved in between sessions. And we have a sister group that works pretty closely with us, and I'm going to let Braden go ahead and explain that. Braden?
Great. Thanks, Valerie. And as Valerie was saying, so my name is Braden Fraser. I work for the sister division of Valerie's RFA division. We are the legislation and policy division. We do a lot of the legal and constitutional analysis of different bills before the legislature during the legislative session. And we did and are going to do a lot of that in regards to these scenarios for the tax structure work group. So that's my role here. Happy to answer any questions. Thank you.
Thank you, everyone. So tonight, because maybe the majority of you are watching this on a video, a recorded version, we will pause at certain times and bring in the experts and just have them once again offer some additional insight or commentary on the issues that we're going to discuss tonight. So I'm going to go ahead and share my screen, and we will begin. So once again, as you know, we are here on behalf of the Washington State Tax Structure Work Group. It's a beautiful picture of downtown Yakima there, if you're familiar with that. And we are here today to really solicit your feedback. So even though perhaps you are watching this on a recorded version, know that there's going to be some information at the end, some links, a survey for you to fill out. We'd really love it if you gave your feedback. That is really what we're here tonight to hear from you. And the whole idea of these listening groups, these work groups, is to go out and talk to people all across the state as we solicit feedback to really help the tax structure work group consider possible changes to our tax structure. The structure of this evening's presentation is going to look like this. We're going to share some background information about the Washington state taxes. We're going to discuss different tax ideas for the future. And finally, we'll wrap up and have next steps. I can probably go very quickly through these next two slides. If there were more people, we would have a conversation, but we are short in number, but great in stature and wondering. So we're going to go ahead and skip these slides about ground rules for conversation. So if you are here and I'd like you to just imagine, honestly, what do you think of? What is the first word that comes to your mind when you hear the word tax? So in a larger group, we would have some participation. We would ask you to just go ahead and type your answers in a chat, just to sort of get the pulse of the room. And you can do this at home. Just think about what is the first word that pops into your mind when you think of the word tax. So let's go ahead and move on. Benefits. All right. Well, we have one. Thank you very much. Diane says benefits. Excellent. So oftentimes we hear benefits and other great, just once again, getting the pulse of the room. And this is the Washington Tax Structure Work Group. This is a bipartisan group of legislators from across the aisle. We have also representative of the Washington cities and the State Association of Counties. So this group has been working together, but let me show you a short video that would tell the story a little bit better than I can right now.
So what is the Tax Structure Work Group anyway? The Tax Structure Work Group is a collection of policymakers working together to develop recommendations for making Washington's state tax structure more equitable, more fair, stable, adequate, and transparent. The group isn't looking to increase or decrease the total amount of tax money collected by the state. It's just looking at the combinations of tax types that could generate the same amount of tax money. The group is only investigating different types of taxes with the goal of improving Washington's tax structure, not a change in overall tax revenue. There are a whole lot of different taxes like city, county, special district, tribal, and even federal, but this group is charged with only looking at Washington's state taxes. So who's in the Tax Structure Work Group? The Tax Structure Work Group is made up of Washington state legislators, both Democrats and Republicans, along with representatives from the Governor's Office, Department of Revenue, the Association of Washington Cities, and the Washington State Association of Counties. The Tax Structure Work Group wants to hear from you to understand your priorities when it comes to taxes. Take a moment and let your voice be heard. Take the survey and tell the Tax Structure Work Group how to improve state taxes.
So you did hear the word survey there.
So
and
what
we
is-
will be providing a survey link at the end of the presentation. Here we are in the process. So a lot of the background economic research took place in 2020. Even before then, there were some preliminary public meetings. But we are in that third stage right now, which is community and business engagement. And if the public, if the feedback indicates that we want to move forward, then there would be some policy recommendations. It's important to know that the tax structure in Washington state has not changed substantially. It's changed, but not substantially overall in the last 80 years. So this is why the tax group has joined together to solicit feedback from interested stakeholders all across the state. Why should we update our taxes? Let's find out.
The Tax Structure Work Group is exploring changes to Washington's state tax structure. This work group is asking, is our state tax system equitable and fair? Is it stable? Is it adequate? Is it transparent? But what do those terms really mean? Let's break it down. First, fairness. A fair or equitable tax system is one that is fair to people and to businesses. A fair tax structure must consider different viewpoints of fairness. One view of fairness is that those individuals and businesses with higher incomes or revenue should pay a higher percentage of their income or revenue in taxes, and those with lower incomes or revenue should pay a lesser percentage through graduated or progressive rates, targeted tax credits, or exemptions. This view of fairness considers the capacity of a taxpayer to pay the tax. Another view of fairness is that all individual and business taxpayers should pay the same percent of their income or revenue in taxes, regardless of their income, through flat taxes or the same tax rate applied to all individuals and the same rates for all businesses. This view of fairness considers the consistency of the tax structure. The Tax Structure Work Group is considering changes to the tax system that would create a balance of these different views of fairness. Next is stability. That means the tax system provides a reliable amount of money even with ups and downs in the economy. Transparency means that taxpayers know when to pay taxes, the amount they need to pay, and how to make those payments. And adequacy. The tax system needs to collect enough tax revenue to pay for established public services.
Right. So that is
The tax structure of our state revenue in taxes, regardless of their income, through
that's basically what this comes down to. It's a conversation about fairness. And you heard fairness defined in two different ways, whether it's consistency or capacity. In other words, those with more income, more revenue should pay a larger share across the board, or should it be a consistent share? And that's, it doesn't matter, flat rate, right? It's sort of flat versus progressive taxes. Consistency and capacity all funnel through the lens of fairness. What does the word fairness actually mean to you? And when we talk about fairness, it's also in these three buckets of stability, transparency, and adequacy. So let's talk about that. Once again, if we were in a larger group, I would sort of open up the floor now to think about a little bit, just maybe not, or maybe so, think about where you lean into the tax structure in terms of, do you think that persons or businesses with larger income streams should pay more of that in taxes, or should everyone pay a similar flat rate of taxes? So let's go ahead. I'm going to go off screen. What we'd be interested absolutely in the chat. What is your first response to sort of those, that through that lens of fairness and those ideas of capacity or consistency? What do you think about that?
Yeah.
It's okay if we disagree.
No, sorry, I'm trying to get to be able to type. I'll just speak, okay?
Oh,
That's
Um,
great.
I think it's about the people who have the most need to pay the most.
All right. Diane, is that I see did you want to say something?
I agree.
Okay, that's a thumbs
Same.
up from Diane. All right, great.
Hannah, how about you?
So we are in the capacity camp for this part of the conversation, and that is great. So thank you for sharing that. Is there any sort of other questions you have before we move on?
Oh,
We have one more.
yeah, I really think the wealthy should pay more.
All right, great. So we're sort of in the capacity camp, which is great. All right, so let's move on to our next sort of idea. I'm just going to share a little bit of information about, and you probably know this, but I'll share it with you anyway. When we look at the Washington state taxes and that sort of pie chart, you can see that general sales tax and selective sales tax being alcohol and tobacco and so forth, that's about 66% really a consumption tax, is the majority of our tax structure in Washington. Then we have, of course, property taxes, other taxes, and the business and occupancy tax, which is something that we will talk about a little bit later. So we added this next slide to put in context where that money actually goes. That money, as you can see, 47% of it, as you know, I think the first sentence of one of our state constitution is all about our paramount duty to fund education in Washington state. So that is 47% of our taxes go there. And you can see human services, higher education, government, and other. People often wonder, well, you've shown us how the state taxes us, so where is that tax money actually going? And you can see nearly half of that does go to our public education system here in Washington state. So just a couple of ideas that the tax group is working on how this structure could actually be improved.
Under the current tax system, low-income and middle-income people pay a smaller amount of tax but a larger portion of their total income in taxes than higher-income people do. Higher-income people pay a larger amount of tax but a smaller portion of their total income in taxes than low-income and middle-income people. The Tax Structure Workgroup is discussing how to balance the capacity of an individual or business to pay tax and the consistency in the taxes that they pay. For example, the Tax Structure Workgroup is looking at ways to make Washington's state taxes fairer for people who live here by considering reductions to the property tax and sales tax and replacing this with alternatives like a wealth tax or income tax. People in Washington state already pay property taxes and sales taxes. As you know, property taxes are taxes on property, like a house or condo. Sales taxes are taxes on things people buy in stores or online. The work group is exploring a wealth tax, which would be a tax on financial property like stocks or bonds over $1 billion. The workgroup is also learning more about a personal income tax and a corporate income tax. A personal income tax would be a tax on the income people earn. A corporate income tax would be a tax on a business income after subtracting expenses and other costs. Remember, the group isn't looking to increase or decrease the total amount of tax money collected by the state, just looking at combinations of tax types that could generate the same amount of tax money. The group is only investigating different types of taxes with the goal of improving Washington's tax structure, not a change in overall tax revenue.
Great. So let's dive in and get a little bit more specific. these are, as that video just mentioned to you, some of the different scenarios that the tax structure group is working, updating that property tax and taxing personal wealth. So we're going to start there. Then we're going to look a little bit at the business and occupancy tax, sort of replacing that with a different mixture of different tax streams, including possibly an employer compensation tax, a value-added tax. We're going to look at taxing personal income and corporate income. And finally, we're going to look at that changing that property tax limit factor. So these are the sort of, I think this slide really sort of puts it into perspective, the different scenarios about how we lower the property tax, we add a wealth tax, we get rid of the business and occupancy tax, we add some different sort of business taxes. We get rid of the business and occupancy tax. There's different mixtures. We add a personal income tax and a corporate income tax. So, you know, this is just, there's nothing set in stone. This is a lot of moving pieces here, a lot of variety, a little different flexibility in these. But this is sort of the baseline of how they're looking, what they're looking at. The core of it is really, how do we lower those property taxes, bring those sales taxes down? Can we add a corporate income tax, a personal income tax? And what about property taxes as well? But the variety of new tax streams. And we often get asked in this part of the presentation, isn't income tax unconstitutional? This is an issue I know we've all been paying attention to. Election day yesterday. Was it yesterday? I believe it was. It's been a long week. And it's been very interesting to see some of the responses to some of the proposed taxation. Well, actually, the things that the legislature voted into law on a statewide basis, if you've been following those. So a question we get often is an income tax unconstitutional? Well, that is a very tricky question. And if you have more sort of want to tease that out, we do have Braden on the line here who can sort of talk to, but we did add this slide to say it would have to address those constitutional issues. And also this slide, some people that we've talked to across the state are actually perfectly content with the tax structure as it exists right now. So we did add the slide to say, look, you know, if you are happy with the tax structure as it exists, the legislature, the tax group also wants to hear that feedback. So your feedback is as valid as people who want to change the tax code. So that's a lot of talking and information from me. I'm going to just take a quick pause here to see any sort of questions rising for you right now before we move on and get into the more specifics about some of these tax proposals. Any thoughts or wonders?
I'd like to say something.
Yes.
Hello. We've been trying to change this tax structure in this state since the 1950s. And my father wrote a letter to the editor in 1954 about it to the Seattle Times, and nothing has worked. I mean, Bill Gates Sr. tried to pass a very fair income tax policy a few years ago, and it was voted down because of a whisper campaign that this wouldn't just apply to rich people and corporations, it would apply to all of us, you know, little old people as well. And I don't know that there's any way to get around it because corporations can spend so much money to defeat us. You know, that's, Harriet Spinell worked on it for years. And it's just really difficult in this state. I guess we just have these huge wealthy corporations, you know, Amazon and so forth. So anyway, not to be defeatist, but I'd like to see this change.
I think in talking about property taxes, we have to be cognizant of the fact that we have less people who own property now. You know, normal citizens who own property. So that's going to change that dynamic a little bit, you know, because we have more renters. Obviously, the people who own the property are paying property taxes, but if it cuts into their profit, then it becomes an issue. So I think that we need to be looking at new streams of things that we haven't been doing. You know we've been doing sales tax and how regressive that can be on people with lower incomes. So.
Yeah, thank you both. I just want to just tease out a couple of questions I heard there. First, Catherine, we actually have, to your question or thought, we have a great tool that people can use online. It's a calculator. And Morgan's going to demonstrate that a little bit later and show that up. But that is a great way, especially what you like. I'm a renter myself, so I would want to know how the property tax might, impact me if I'm not paying property tax and they're lowering property taxes. Many people are renters in this city, as you know. How would this impact them? And then to Diane's question and wonder, I'd like to just throw that open to the group. Why does now seem like, why can we be optimistic right now that things might actually change? Who would like to be our designated optimist for the evening? Or all of us, perhaps. Morgan, perhaps you, why is now the moment? Why do we think that now could be the moment for some revision to our structure in Washington State?
Yeah, I won't say that I won't place bets on change, but I will say I will place emphasis on the tax structure work group's desire to have conversations with constituents, both individuals and households, on this topic. I think they have, and I mean this, really want to test these ideas and really want to listen to constituents and hear, what they're saying. And I think the meetings like tonight and the messages we carry back, as well as the tax town halls that many of them participated in greatly over the last month, they heard constituents raise many of the same issues that you rose today. And I think for them, they were going to grapple with it and understand how they can forge a way forward. So I would say, I'm optimistic because I trust the process here, right? And I trust the intent of their wanting to test these ideas and hear what people have to say. So thanks for putting me on the spot, Scott. But
Morgan,
hopefully that's a good answer around how this may be a little different.
I have a question.
Yeah.
Do you think the changes in the federal income tax with the child tax credit might impact people's being receptive to looking at our tax structure?
I don't have a good opinion on that as anybody, but I think it's a wonderful question. So, but I think people have been talking about sort of just the relationship, not just, obviously we're talking about state taxes here, but people have raised the issue like, well, how can we relate this back to the other taxes we pay, right? At the federal level, the local level, and how to think about it more comprehensively. So I think we can definitely carry that forward there. Catherine, so thanks.
Thank you for that ray of sunshine, Morgan. I kid you, but I also will just add, it does feel sort of like just a moment in time right now. After this pandemic, social justice movement, there's been a lot of conversations that might not have been happening before. So perhaps this is the moment. I don't know, but I do know that this is an extraordinary opportunity and moment in time for at least conversation about these issues. Kind of a unique moment in our time. So I'm going to go ahead in the interest of our time and go and pop into some of these specifics about sort of some of the scenarios. So let's get into the property tax and taxing personal wealth. So under this scenario, we would add a wealth tax. And that means that, as we know, property really refers to people's buildings, right? Now their homes and the rental properties. This would actually consider things like stock portfolios, dividends, financial property, bonds, et cetera, as property. So that is kind of a shift in thinking. And the exemption, this would be on the first $1 billion would be exempt. So according to my colleague in an earlier presentation, this would impact roughly 700 people in our state. And what that would mean if we impose this wealth tax would that the first $250,000 of homeowners, the value of your home would be exempt from property taxes. So that is scenario one, adding a wealth tax, something akin to, I'm not quite sure of the details, but what Diane referenced when Bill Gates Sr. was lobbying for that wealth tax. I'm not sure how they're similar, but it is a similar concept at least. So which is fairer, maintaining the current property tax or adding a wealth tax and decreasing the property tax? Now, all of these questions are actually on a survey that we'll give you the link to, or we'll put that in the chat. And you can answer these questions directly. So as we talk about these scenarios, you have the opportunity to make your voice heard by filling out that survey and sending it along. There's also comment field, so if you want to extrapolate, and there's also just, I don't know on this question. So any way you can participate is great. That is the wealth tax proposal. Secondly, a corporate income tax and a personal income tax to address stability. We talked about stability being that concept where in times of low tax or higher tax revenues, no matter what the economy is doing, we can be sure that we have a robust ability to pay for all of the things that you saw in that pie chart that the state needs to pay for, public education, of course, being job number one of the state. So if we look at this sort of current tax structure, currently, as you saw, the majority of that pie chart is business and occupancy, sales tax, and property tax. Well, if we were to, let's look at getting rid of the business and occupancy tax, we would then add that corporate income tax. Sorry if there's too many moving pieces here, but it would mean indeed that we would lower our sales tax and our property tax. And we saw in that pie chart how those are sort of largely, well, sales tax, at least consumption, over 50% are taxes on things that we purchase here in the state of Washington. So let's just move quickly on this one. Personal income tax, I think based on the conversation we had a little bit earlier, this is pretty clear in your minds in terms of should we have a progressive tax based on the relative wealth that people and businesses have, or should be a flat tax on all people's income. So let's look at this scenario, sort of get a little bit more specific. In general, this is projected, this is just an estimate, but we might be looking at a 3.7 average, sort of a flat tax, right? Or a 2.1 to 4.2 progressive tax. When we do these presentations, people are always asking, give us some specifics, and as specific as we can possibly be in this sort of idea, in this generative state, that it would be a 3.7 flat tax if it was a flat tax, and if it was a progressive tax based on your income, it would be between 2.1 and 4.2 based on your salary. Sales tax would then be reduced to 4.5. And then property tax, as we mentioned earlier, would be reduced. The first $250,000 value in your home would be exempt from property taxes. So just sort of, once again, a generative idea, a projected thought. There you go, sort of personal, sales, and property. Any questions about that slide, about sort of how that might work?
Just, Scott, I wanted to clarify
Yeah.
that we're saying we don't need to increase income in our state.
I'm sorry if I misspoke. I don't know. I'm sorry. I'm
Because
sorry.
the idea was that we're not trying to change the amount that we're operating on. We're
Revenue.
looking at changing where it comes from.
Yes.
But there's nothing in this about increasing the amount.
Yes. So as you heard in the video, and the tax structure work group is a very important point, that we are not looking to increase the overall taxes taken in by the state, just sort of changing the way the taxes are collected from different groups or individuals. So in other words, that they wanted to make sure that everybody knew that overall that they're not going to collect more taxes. They're just going to collect taxes in a different way. Does that clarify it?
Yeah, so another way to think about it here is a lot of the issues that people point to, right? Every year the legislature has to deal with balancing the budget, right, in terms of spending and taxes. But a lot of the, I would say, just say criticism, right, of the tax structure is that it's structured in a way that is unfair, right? And that's whether it's businesses or individuals that levy that. And so the way we're presenting this information is in a revenue neutral way. So that way we don't have to have a conversation around,
Right.
oh, you're raising or lowering taxes, right? It's more focused on what actually is happening in the structure of it. And so think of it as basically a way for us just to isolate that piece. So we don't have to have a conversation over here about whether taxes are too high or too low, right? It can be
Okay.
more about like, do you think this is a better way of raising the revenue or a worse way, right? And so hopefully that's clear.
Okay.
Great. All right. So I'll just throw this to the group once again. I think we asked this question, but if you'd like to answer it, I did hear, I felt like there were, Catherine and Diane both sort of were leaning on the side of the progressive income tax. And I don't want to put words in your mouth, but is that sort of where we're falling in terms of this idea, which might be fairer?
Yes,
Um,
me.
Yeah, and I mean, my daughter lives in Oregon. Why can't we have their tax structure?
I love Oregon too.
Yeah, nothing wrong with that.
Yeah. Should we, well, let's unpack it a little bit more. Should we maintain current sales and property taxes? Or on the other side of the scale, decrease sales and property taxes and add a progressive income tax? So we're going to have like a couple of different choices. Should we either add a progressive income tax or should we add a flat income tax? And I think I might know the answer, but I don't want to put words in your mouth again.
Well, I think at least for Janet and I, we're leaning towards a progressive income tax. It's just that we have gone so long in this state without an income tax. It's really hard to get over that hump of understanding how beneficial an income tax could be.
Right. And for those of you watching the recorded version of this, as your facilitator, I'm trying to keep an even keel. So there is no right or wrong answer here. It's just our opinion. It's just our feedback. So I think we're leading in this conversation in terms of what I'm hearing is that into a little bit more into that progressive tax. So let's dive into the property tax to address this.
What about eliminating sales tax altogether?
Oh, can I ask my colleagues at the Department of Revenue to answer that question?
Yeah.
Valerie, thank you.
Hi, welcome. Thanks, Scott, for throwing me that one.
Yeah.
So these are all scenarios. So let me be clear on that. There's nothing here that the tax structure work group has put into a complete bill yet. One of the things that if Scott can go back to that slide that shows you the breakdown in revenue, that makes it harder to fully eliminate the state sales tax is the portion that the state sales tax is of all of our revenue. One more backwards. There you go. So you can see that general sales tax is like 45%. So they would need to replace that 45% of the revenue, which may not be feasible with any one of these tax options.
That's why we go to Oregon to buy our big ticket items. Not that I'd ever done that before, of course, but they do have an income tax down there in Oregon, of course. So let's just look at updating the state property tax for a second. You may know that the property tax by law is limited to 1%, and that is the growth of the property tax. And that doesn't include local levies or new construction. There's add-on values, but the state is limited to that 1% annual growth in property taxes. So, the local levies and so forth, school, park districts, local levies, libraries, and these things are paid for by those property taxes. What if instead of that 1%, those local levies and so forth, we were able to link our property taxes to a combination of population growth and inflation. Inflation, a lot in the news these days, but would that be sort of a fairer system in terms of how property revenues could grow? And once again, there is this survey. We'd love you to answer these questions, weigh in on your opinion. what is a better limit on how much property tax revenues can grow? Would it be a current system right now, which is working at about 1% plus local levies plus a construction additional tax? Or might it be a revised limit based on the growth of the population and inflation, sort of a combo of that? Any thoughts on that particular question? Maintain the property system 1% plus, or linking it to population and inflation factors?
I'm not really sure
Mhm.
what the impacts of those decisions would be. I mean, I just feel like I don't really know enough to be able to answer that.
Yeah, I would say when we get to the tax calculator demo,
Uh-huh.
we have some tools here that hopefully it'll make it, you'll understand maybe some of those implications a little more, and we
Okay.
can cover that then. But I would say, Scott, we can keep moving though.
Yeah, absolutely. Thanks, Mark. All right. So, business and occupation tax. We'll go through this wrap up.
Right now, all businesses in Washington pay a business and occupation tax, or B&O tax. That tax is based on the total amount of income the business receives, regardless of the amount of profit the business actually makes. The amount of profit that different businesses make at the end of the day after paying all their expenses can vary greatly, even within the same type of business. Think about the difference between a small family-owned store versus a large big box store. That means that the B&O tax can be tough on small businesses, startup businesses, and businesses with small profit margins. The Tax Structure Work Group is considering alternatives to the B&O tax that would tax a business's total profit rather than the total income a business takes in. There are a few alternatives that the work group is exploring, and let's take them one by one. A value-added tax is a tax on the difference between the value of a business's sales and how much it costs them to create their products. For example, if this lemonade stand sold lemonade for $3, but it only cost $1 to make, then the lemonade stand owner would pay taxes on that $2 difference. An employer compensation tax is a tax that a business would pay on total employee compensation, meaning salary, commission, and bonuses, that's greater than $150,000 per year. This would only apply to businesses with annual worldwide compensation payments to employees totaling more than $7 million. A corporate income tax is a tax based on how much income a business made after expenses. This tax could be flat, meaning all business income would be taxed at the same flat rate, or progressive, meaning as their income increased, their tax rate would also increase. Lastly, a margins tax. That allows a business to subtract certain expenses from the total amount of money it makes and then pay tax on that remaining amount. The work group is exploring all these different types of taxes: the B&O tax, value-added tax, employer compensation tax, corporate income tax, and margins tax.
All right. So once again, to sort of move through these value-added tax, that is that sort of idea that if the lemons cost $1, but you can, it's $3 for the cup of lemonade, you're only taxing on that value add. In other words, you have the skills and the capacity and beautiful ability to make lemonade, and that is what is taxable, just the added value to that $1 of your sort of expense or supplies. Margins tax is a sort of a little bit more complex. They have this in Texas. You can subtract a certain amount of expenses. You can choose whether it's the cost of goods sold to deduct, your wages, 30% of your revenue. That's sort of a combo platter that you get to choose as a business, or whatever is the most advantageous to your structure. So as you saw, that's a rather large wedge of the pie that we saw, the business and occupancy tax and the overall tax revenue that the state takes in. Again, we're not looking to make that wedge bigger or smaller, keep it the same way, but looking at different methods of sort of collecting that same wedge. So total revenue, we could replace, as we look at these different sort of that top blue chunk on the right there, the value added or margin tax, that's actually going to be a higher rate on that. It's a smaller pool of money, if that makes sense. But it's a taxation, it's a different structure. So I don't know if you'd like to really sort of investigate more of these. Certainly business owners, if you are a business owner and you're watching this, or Catherine or Diane, the business and occupancy tax is one that people have a lot of feelings about. So that's why the tax group is really looking at some of these different solutions. Which is fair? Would it be a business and occupancy tax or a value added tax? And again, that employer compensation tax, that's total employee compensation of more than $150,000 a year per employee, and a worldwide payroll of more than $7 million a year. So clearly smaller businesses would not be as impacted as a employer compensation tax might be on larger corporations with higher payrolls. Finally, our scenario is replacing this B&O tax, value-added margins, and employer compensation tax. Once again, just different ways to look at that same sort of slice of the pie, but apportioning those revenue streams, tax revenue streams, a little bit differently. This one replaces, well, it's just, again, it is sort of a little bit of asking you which you think is fair. Is a value-added tax, margin tax, that is a combo there. Value-added tax, margin tax, plus employer compensation tax. So once again, sliding in different business taxes in a way to make up for the business and occupancy tax, which if you probably know this, but taxes are basically all of the expenses. I can ask Morgan or one of our members to sort of explain a little bit more about that, as I'm not a business owner myself. But let's finally, this is our final scenario, I believe, and this is a corporate income tax and personal income tax to address stability. So once again, remember looking all these sliding pieces. I know this is a lot of information to take in on a Thursday night. But once again, a tax on the business made after expenses, right? Should that be progressive? As businesses' income increase, their tax rate also increases, or should it be a flat tax? All businesses are paid the same. So I'll just throw this out there. Which do you think is fair to this question? Larger businesses, higher taxes in terms of their rates, their percentages, or flat tax, all businesses, regardless of their size, paid the same flat rate. Any thoughts about that?
We think progressive, Janet and I.
All right.
As
Yeah, flat tax is regressive. We've
Yeah.
shown that in the past, done the
Great.
math. Yeah.
Thank you. So we are probably looking at some corporate income taxes. If this was our tax work group, these would be our recommendations. Perhaps a progressive tax rate, a corporate income tax on those businesses, $7 million or more worldwide. And then looking at these different scenarios, once again, sort of some visual aids, if you will. If we also replaced the business and occupancy tax, we could also be looking at lowering sales tax and property taxes as part of the larger sort of package. And then once again, by adding that personal income tax. So those are some of this really, I think, puts it in a nutshell, this slide once again, replacing the business and occupancy tax with a corporate income tax, or as we also saw, a B&O, a value-added tax, or other forms of taxation on businesses, but getting rid of the business and occupancy tax altogether. Once again, adding that personal income tax, which would cause our sales tax and our property taxes to go down. We've already seen a couple of those of scenarios. So we are almost at the end, and I did want to give Morgan some time to show off this incredible tool to actually see, like, firsthand, what are some of the impacts of these different tax scenarios. I think it's a great tool. It really helps to sort of put in, in a visual format, how to conceptualize what these changes might look like to you.
Great. Thanks, Scott. And so just want to direct you, and I think Pauline can drop this in the chat. But if you go to the Tax Structure Work Group's website, here's that survey that we want everybody to take. But one of the things that might be helpful is if you click on the Learn tab, just so you can familiarize yourself with some of the specifics here. So we'll get to these little fun calculators, but down below you'll see those videos. If you want to click on them again, I would direct you to these links here. You have basically a lot of detail if you want to get deep onto the taxes, and so that's there for you. But if you want to just kind of focus more on sort of how some of these individual taxes might affect you, you can go to the household tax calculator. And so what it allows you to do, if you're a homeowner, you can enter in the value of your home. And then you can enter in some information about your adjusted gross income to understand sort of the effect of the income tax. And, obviously you can check if you're disabled, over 65, your filing status, let's say married, filing jointly with 2 dependents, and a home. Let's say you have an adjusted gross income of 80,000 and your home is worth 400,000. And so we can see, so the green bar here shows you what you would pay currently with no change in taxes. So I think, Catherine, you had the question about what happens with the limit factor. So if the limit factor is raised, it would actually raise everyone's property tax, right? And so you can see that in the yellow. So over time, you would pay more in property taxes on that $400,000 valued home. However, if there was a wealth tax placed in conjunction with a $250,000 primary residence property tax exemption, that would exempt that first $250,000 of home value, one's property taxes would go down. In this, what you see is in this blue line. All right. And so obviously, if your home is worth less, say like closer to, say 325,000, right? You can see the effect of that. Obviously, say your home was live in the Puget Sound, it's worth a lot more, about 153 million, right? You can see what the effect of that would be. So again, let's just go back to that $400,000 example and then click over here to the income tax scenarios. And so here, I think, as Scott said, the current assumption is everybody's paying either the sales tax and the property tax, right? So this household with that $400,000 home and that $80,000 in adjusted gross income, this is kind of what they're paying in the state portion of those taxes. Now, if we reduce the sales tax and property taxes, right, you would see that effect. So sales tax goes down here in the gold, and then the property tax goes down even more in the gray. And then you see the effect of adding the personal income tax there, right? And so you can see here, scenario E is the flat tax, and here it's a little less because it's more progressive, right? So if you're a household with lower income, right? So you're making 400,000, and let's say you do own your home at 300,000, you would see the effect there, right? So this is what they would pay currently in taxes, and then you see the effect of those reductions in the sales and property tax, as well as lesser amounts of personal income tax paid. So this is a tool. It's super fun. You can read all the details, what's happening. You can play around with it, so you can see in different situations what different kinds of households would pay in taxes. And then the business tax calculator down here talks about the different methods. And so what we have is lots of different representative businesses you could click through. Like here's a retail store, and you says, okay, this is small, non-chain business. It likely has a single point of business. It's organized as sole proprietorship and would pay the personal income tax instead of the corporate income tax. And you can kind of see, so less than $1 million, right? They're still paying the B&O, but because the margins in the VAT have the $1 million small business exemption, they don't pay any taxes then. But as that number gets larger, right, they start paying a little more of those taxes, and you can kind of see the effect of that, right? If they're more profitable, right, you can kind of see, well, they're going to pay more in the personal income tax. And so these little slider bars let you understand kind of how different elements of these taxes, right, actually change how these businesses might be taxed. So again, it's a wonderful little tool to mess around with. And then you can go back here, click survey, and take that survey. Back to you, Scott.
Thank you, Morgan. Yeah, I think that is just a really great tool to find out how that would impact you personally, depending on your property and your salary, obviously. So I encourage you to do that. And also just I know we keep saying this, but really one of the big reasons we're doing this is to have people go on there, fill out that survey, submit it. That you can submit it anonymously if you don't want to add your name to it, but your feedback is just as valued as if you put your name to it. So just really encourage everyone who's watching this recording to make sure to please go on that website, fool around with the calculators, see what you think a little bit more, and answer that survey. And again, the survey questions, if you watch this entire video, are all sort of the issues what we discussed are all sort of form the backbone of that survey. And you can, because you're watching this, you can actually rewind it if you want and go back to a section where Scott tried to explain some of those concepts.
Well, I see Diane put a question in the chat. Could you address that,
Yeah.
Scott?
Yeah, would the personal income tax take into account medical expenses? That is a great question. Who wants to take that on the group?
Maybe Valerie knows specifically, but I would say if it currently is something that it is part of how you file for your federal income taxes, it would also apply to the personal income tax as a general statement. Did I have that right, Valerie?
Yeah, the way we modeled this and the way that we understand the proposal that has been, or the scenario that has been kind of put together for this exercise and trying to get it out to the public is that this would start with your adjusted gross income on your federal tax return and then have a standard deduction for the state, plus a couple of special deductions for those that are, I hate to use this word, elderly or disabled, but it would fall into that category.
I see.
Okay, thank you.
Sure. Other questions or thoughts for the good of the order?
I don't think so, but I am going to distribute this widely, the recording, and do an explanation on taking the survey as well. So you can be assured that I would do what we'll do that. And I really appreciate all of your time and expertise, because I think it's going to take a big push in Washington and reaching out and getting people involved so that they really understand and they don't, like Diane said, hear stories that aren't true about what's going to happen.
Yeah.
So I think that's going to be important.
Yeah, and it's great. I want to share my screen one more time to just give you some quick context in terms of, you know, where we've been. We've been having these, in addition to these We Come to You meetings, which is what's happening this evening. We've had tax town halls over the entire state, 2:30 and 6:30 p.m. town halls. So lots of conversation, lots of interesting opinion, lots of feedback. And so I do think, if anything, there is obviously, through this wonderful technology that we have now, there is opportunities to make your voices be heard in perhaps a way that we didn't have the opportunity to be heard before. So just, you know, we've been doing these also in different languages. We've had multilingual sessions. So the breadth of the work here by the outreach, I'm hoping will, and I just once again a plea to add your voices to that feedback as well, can move this needle. So I
Yes,
believe it.
agree.
So hopefully just fill out that survey. I would like to thank you, Catherine, for organizing this. I feel really indebted to you with your injury by, you know, coming here and making this happen this evening.
Yes.
Mad applause to you for hosting us this evening. We really appreciate it.
Right, and I will make sure that I get it out. So I appreciate all your efforts to be here tonight to present to us. So thank you.
All right, everyone, have a great
you.
rest of your Thursday evening.
Good night.
Good night.
Thanks so much.
Thanks again. Very nice to see you, Diane.
Yeah, nice to see you.
And even though I look fairly awful here, but
Oh, you don't look awful.
I feel awful, I guess is more like it. Anyway,
Oh.
I will, like I said, I'll get this out and I'm gonna take the survey and some of the remaining questions that I have is, do we need more money or do we have enough to pay for what we need? So that's always kind of in the back of my mind.
Yeah, increased revenue, yeah.
Yeah. So, because we have gone so long without an income tax, it's going to take a big push to get people to accept having an income tax. But,
yes.
you know, I worry about the property tax because we have such inflated property taxes here.
Values, yeah.
And how does that impact renters? So there's a lot, but I really applaud the legislature for putting this together so that we could start to maybe get this resolved. So,
Yes, and you know, Alex Wiley, she just freaked out when her property taxes went up and the Republicans did that in Olympia. And she said, I can't afford it. I just can't afford it.
right,
And, you know, it was just a temporary thing to pay for the education. Yeah. But she thought, you know, well, the Democrats dominated the legislature, so they did it. And I couldn't
Right.
explain to
well,
her.
we have to start thinking more collectively than how this is impacting me individually, you know?
Yeah, yeah.
Did not like that dependence on the calculator. It was all about how's it affecting me personally.
Yeah,
How
yeah,
about we have a calculator, how it affects the whole state?
right. And how it affects our services.
Yeah, different groups
Right, yeah,
showing different, you know, the lower end, the middle end.
right, yeah. Well, that would be a good comment to give them then.
Yeah.
Yeah.
Yeah, that's a good point.
Well, thanks, Diane. Good
Yeah.
to see you and hope to
Yes,
see
thank
you
you.
again soon.
Okay, get well.
All right, bye-bye.